When buying a home, especially as a first-time home buyer in Lynchburg or a military home buyer, choosing the right mortgage is crucial. Each loan type has benefits and drawbacks depending on your financial situation, credit score, and home ownership goals. Today we compare and contrast conventional FHA, USDA, VA, owner financing, and rent-to-own to help you make the best decision for long-term financial success. Obviously, I'm covering a lot of data here, so head over to my YouTube channel to see the extended video. Let's talk about conventional mortgages. They are the best loan type for those with solid credit and financial stability. These loans are not backed by the government, meaning that lenders, the investors, take on more risk. However, they offer the best long-term benefits for wealth building. While conventional loans are the hardest to qualify for, they make it the easiest to secure a home due to fewer restrictions and faster approvals compared to the government-backed loans. Here are the pros. Lower interest rates for those with a good credit score, 700 or greater. There's no upfront mortgage insurance premium. The down payment can be as little as 3%. You can remove the private mortgage insurance once you have 20% more in there. And there's more flexibility with the property options compared to government-backed loans. It's easier to secure a home once approved, and it's more favorable with the fine print compared to VA loans for veterans. Now the cons are, it requires that 700 credit score or better. It requires a stable income and financial history, and it's the hardest loan to qualify for, so this may not be the best option for you. FHA is the Federal Housing Administration. It is not the first-time home buyer, whatever the A stands for, people that get that mixed up. These loans are a solid choice for home buyers who may not qualify for the conventional. While they offer flexibility with a lower credit requirement, they do include mortgage insurance costs, making them less ideal for long-term wealth building because you're putting money into the program for future users. Now the pros are, you can have a lower credit score like a 620. It has more lenient debt-to-income ratio requirements. It sometimes has more favorable fine print compared to VA loans for the veterans as well. Now the cons are, you have a higher down payment, about 3.5% is the minimum. You have required upfront and annual mortgage insurance, which cannot be removed without refinancing. And loan limits vary by location. All right, let's talk about the United States Department of Agriculture loan, or the USDA loan. It offers 100% financing with no down payment, but its requirement is that it's limited to a specific geographic area. Here, you're basically thinking outside of Lynchburg City proper. Now, the pros are there's no down payment required. You have a lower mortgage insurance cost, typically compared to FHA, and you have competitive interest rates. The cons are, it has strict location eligibility requirements, so you may not get the home in the location you want. There are also income limits. It's limited to your primary residence, and you do have to keep buying into the program to support future users. So it's going to be less of a wealth building tool compared to the conventional mortgage. Now let's talk about the VA loan. They provide benefits for eligible military service members, veterans, and their families. The pros, as everyone knows, no down payment required. There's no private mortgage insurance, and it has very competitive interest rates and relaxed credit requirements. The cons are, it's got the funding fee built in just like with all the other government loans, and it's limited to your primary residence only. Fine print can be less favorable than the conventional and the FHA loans for veterans. So this type of loan really does depend on the lender and your specific circumstances. All right, now let's talk about owner financing. It's when the seller provides the financing directly to the buyer instead of having the bank involved. This can be a good option for those who don't qualify for a conventional or government-backed loan. It's a high-risk option, though, for both the buyer and the seller. The pros are there's no bank approval needed. You have flexible terms that are negotiated between the buyer and the seller, and it can be an option for those with lower credit scores. But the cons are it also has higher interest rates compared to the bank loans, and it requires negotiation and legal agreements that you're going to have to pay for to draw up. It's typically a shorter loan term with a balloon payment at the end, so that's going to increase your risk for the buyer, and you also have risks to seller, let's be honest, because the buyer may not go through during the terms. Now, to get away from that, you have the rent-to-own agreement, allowing buyers to rent a home with the option to purchase it later. While that may seem like a good way to build equity without mortgage, it takes all the risks involved in owner financing, increases those risks, and then lays them all on the buyer's shoulders. This is a great option for sellers, not recommended for buyers. The pros are it allows potential homeowners to live in the home while working on mortgage approval. It can be an option for buyers with lower credit scores. That's about it for buyers. The cons are it's a risk of total equity loss if the owner passes away or gets sued. There's no guarantee if the purchase will go through either. Often it has higher rent payments with extra fees built in to support the seller, and it has limited legal protection for buyers. So to wrap this up, for long-term wealth building, a conventional loan is the best option, especially for those with good credit score, for first-time home buyers, and for military heroes. FHA loans are the second best choice, particularly for buyers who need a lower credit requirement. VA and USDA loans can be useful, but it's a case-by-case basis. Owner financing and rent-to-own should be approached with caution due to the risk. Now, mortgage regulations and requirements change frequently. It's essential to speak with a knowledgeable mortgage lender to ensure you get the best financing for your home purchase. I have a network of local and national lenders specializing in different loan types based on your specific situation. Contact me today to discuss your options and find the best lender for your home buying journey. God bless.